In the next answer 3, the next question, which asks us to calculate the incentive fee based on a hurdle rate. So in this case, the management fee remains the same, that is the end of the period fund value $250 million into 2%, that is $5 million is base management fee. The incentive fee is calculated based on a hurdle rate 5%, that is $200 million into 5% equal to $10 million, above which the incentive fees shall be paid. So the incentive fee calculation goes as this: $250 million the ending value minus $200 million initial investment minus $10 million, that is the hurdle rate value, minus $5 million the base management fee. So the net amount is $35 million multiplied by 20%, that gives us $7 million of incentive fee. So the total fees to Star Money hedge fund is 5 plus 7, $12 million, and the investor's return calculation is $250 million fund value minus initial investment 200 minus $12 million fees paid to Star Money over an investment of $200 million, that gives us 19%. So obviously one can notice that as the total fee amount reduces, the investor's return increases. Taking further our case discussion to the concept of high watermark. This is a very important concept used by many hedge funds. This is to try and protect the investors from paying the base fees or incentive fees on the same performance twice. As we have seen that in case the fund value declines in any year, the investors expect the fund value to go above the previous high value, and then only the performance or incentive fees are calculated. Let's understand this in the form of an example. Continuing with our case discussion of Star Money, in the second year, the fund value declines to $220 million. Remember, at the end of year 1, the fund value was $250 million. You have the fee structure is as specified in the original discussion, but now it includes a use of high water mark. What are the fees earned by Star in the second year, and what is the investor's net return given this fee structure? Further, in the third year, the fund value increases to $245 million. The question number 5 states that the fee structure is as specified in questions 1 and 4, that what are the fees earned by Star in the third year, and what is investor's net return for the third year. And finally, question number 6 asks us to calculate the capital gain to the investor over the 3-year period, and what are the total fees paid to Star over the 3-year period, and then calculate the arithmetic and geometric mean annual returns for the 3-year period based on the structures in question 1, 4 and 5. So let's take up question number 4, where the fund value has declined to $220 million. So in this case, the base management fee is 2%. So $220 million, that is the end of the period fund value, into 2%, that is $4.4 million is the management fee. There is no incentive fee payment due in this year because the fund value has declined from the previous year's value. The value at the end of year 1 was $250 million. The value at the end of year 2 is $220 million. So no incentive fee payment is there in year 2. So the total fees to Star Money is the base management fee itself, $4.4 million. And for investors, now in this case, the opening capital position for the second year will be the fund value at the end of year 1, that is $250 million, minus the fees paid in year 1, that is $15 million. So $235 million is their original fund value, or the opening fund value, or the opening capital position at the second year. So the return calculation is based on that, which means the denominator used is $235 million. So the return for year 2 is $220 million, that is the fund value at the end of the year 2, minus base management fee paid $4.4 million, minus the opening value at the start of year 2, that is $235 million, divided by $235 million. That gives us a negative return of 8.26%. So in this case, you can see that the negative return is enhanced because of an additional base management fee payment. And finally, the ending capital position at the end of the second year will be the fund value at the end of year 2, $220 million minus the fees paid out as base management fee of $4.4 million. That gives us the value of $215.6 million as the ending capital position at year end 2. So the situation in the third year is that the fund value is $245 million. So the base management fee is calculated at 2%, giving us $4.9 million as the management fee. And now the fund value has increased compared to the previous year. So previous year's value was $220 million. So the previous year's value was $220 million and the value at the end of year 3 is $245 million. So incentive fee is paid, but it is only paid in case it has breached or reached a high watermark level. And the high watermark level for us is the year end capital position of year 1, that is $235 million, because the year end capital position for year 2, as we saw, was $215.6 million. So in this case, $235 million is the high water mark, the highest value achieved by the fund, and hence the incentive fee calculation goes like this: the end of the year 3 fund value of $245 million minus $235 million, the high water mark, multiplied by 20%, that is $2 million of incentive fee. Then the total fees earned by Star Money will be 4.9 plus $2 million, that is $6.9 million in year 3, and the investor's return is $245 million ending value minus the opening capital position at the end of year 2, that will be opening position for the start of the year 3, that is $215.6 million minus total fees paid in year 3, $6.9 million, over the ending position at year 2, that is $215.6 million. That gives us the investor return of 10.44%. And the ending capital position for year 3 shall be $245 million minus the fees paid in year 3, $6.9 million, that is $238.1 million. Note here that the ending capital position of year 1 was 235, year 2 was 215.6. So in this case, at the end of year 2, the high water mark was 235, but now after the end of year 3, the ending capital position is $238.1 million, which is higher than 235. So now 238.1 becomes the new high watermark level for the next year. The last question asks us to calculate the capital gain to the investor. So pretty straightforward. The end of the year 3 value for the investor is 238.1 minus the original investment 200. So the capital gains in absolute terms to the investor is $38.1 million on the total investment. And the total fees earned by Star Money, that is total fees in year 1 plus year 2 plus year 3, that gives us $26.3 million. Coming to the mean annual return calculations, the arithmetic mean pretty straightforward. You just sum all the 3 years returns and divide it by 3. That gives us 6.56% as the mean return, arithmetic mean. And the geometric mean is calculated like this: you take the ending period value of year 3, divided it by the opening investment, that is $200 million, raised to the power 1 by 3, or else cube root of 238.1 divided by $200 million minus 1. That gives us the geometric mean annual return for the 3-year period of 5.98%. Coming to the hedge fund valuation part, generally hedge funds are valued on a daily, weekly, monthly and or quarterly basis, depending upon what type of the hedge fund charter or structure provides. Now this valuation may be based on the market or estimated values of the underlying investments. However, the fund's valuations may differ based on the price or the quotation they use for valuing the underlying investments. So whether it is bid prices or ask prices or average prices or median quotes, that will drive the fund's valuation. The common practice is to use the average quote, that is bid plus ask price divided by 2. And a more conservative approach of valuation would be to use bid prices to value long positions and ask prices to value short positions, as these would be the prices at which the fund can close out or square off their positions. Now, when the underlying investments are highly illiquid or they are not traded publicly, then obviously when they are not traded publicly, the market price is not available, and then in that case it is appropriate to use some of the estimated values using some statistical models to value these investments. Due diligence. Obviously, before an investor decides to invest in a hedge fund or a fund of hedge funds, appropriate due diligence measures need to be taken. Let's understand this. Some of the key factors to consider before investing are: 1. Investment strategy. What kind of fund strategy are you investing in? Whether it's a growth strategy fund or value strategy fund or a sector focused fund or a country focused fund needs to be taken care of. What are the investment process do they follow while picking up investments? And what is the competitive advantage of the fund that you are analyzing over the other funds? Now obviously there could be a limitation on the availability or disclosure of these two items, that is the investment process, by the hedge fund, but still you can ask some general basic questions to understand the investment process used to identify investments. Track record. Of course, it is a very important point to consider before investing. You can see the historical track record, how long has been the fund in existence, what has been its track record performance over last 3 years or last 5 years or last 7 years, and accordingly decide. Size and longevity. The bigger the fund size, the more avenues or the more classes of assets it has options of investing in. And longevity, how long the fund has been in existence. If the fund has a good history of about a decade, it's pretty sure that they have been making good investments and they have been meeting their redemption calls, and hence longevity proves or gives us some indication of the credit worthiness or the investment worthiness of the fund. Management style. Is it a very active management fund style? Is it a passive management fund style, etc., can also guide you. And finally, the key person risk is also an important aspect in due diligence, and the reputation of the fund. So if a very reputed financial services house comes up with a hedge fund, obviously you know the people behind it, who are running the fund, what is the brand name behind it. That all factors also go in the decision making of whether investing in a fund, hedge fund, or a fund of funds.